Hello, everyone. I'm here today with Grant Menard from OnShore Mortgage. Hey, Grant, how are you today?
Good, Brad. How are you?
I'm doing all great. It's been a long time since we last spoke, with the height of the pandemic here, and a lot has changed in your business. Can you tell us about your new mortgage company?
Sure. Well, it's been a wild ride, huh? COVID-19 and everything we've had to deal with. So basically, yeah, after 24 years of working in the industry and being everything from a mortgage advisor to a team leader to a vice president, I decided to open up my own firm. Basically, opened up a digital mortgage company where everything is done right online, documents uploaded right online, and we have some of the fastest closing turnaround times in the business.
That's great. Yeah, I know. I've seen on Google and LinkedIn in your reviews, your average closing time, I think, is what, like 7 days?
Yeah. So 7 days on a refinance, because sometimes you can get away with it with an appraisal waiver. Purchases are closer to 16 days, thereabouts, as you know, because we work together.
Yep.
But having the flexibility to handle the file myself from beginning to end has alleviated a lot of stress for my clients and also made the process very streamlined. So yeah, it's about 7 days on a refi and 16 days on a purchase.
And that's great, especially in today's competitive real estate market. The sooner you can get someone to the closing table, the better that offer looks for them. So,
Yeah,
those are impressive numbers.
Mm-hmm.
Since we spoke last time on the mortgage front itself, what has changed?
Well, it's the good thing is there's still plenty of loan products out there, right? Plenty of low money down, no money down, even in USDA approved areas.
Yep.
But it's getting a little bit more difficult, Brad, for self-employed borrowers. So if you, were a landscaper, let's say, and you were looking to qualify off your past 2 years tax returns for income, Fannie Mae and Freddie Mac are now requiring you to also provide 3 months of your business bank statements. And those business bank statements kind of need to mirror what we're claiming for income. So if you're saying that you make $5 to $6 grand a month, then those deposits into your bank statement for the prior 3 months need to show averages of about that $5-6 grand a month. And that's the figure that an underwriter is going to go off of. Where we see it start to cause trouble is maybe you're in your slow season, right? So you make great money per year, but the last 3 months have not been great. Let's take a realtor, for example, right? Typically realtors, although this year is kind of a bad one to use because you guys have been really busy, but the typical realtor winter is one of the slower parts of their season. In spring and summer start to pick up. So if you were a realtor trying to get a mortgage, maybe the winter you wouldn't be able to do it because your deposits would not average what you're trying to claim as income. So that's just something to kind of keep your eye on. I do have a couple of clients, actually, the reason why I said landscaper, I have a couple of clients that are waiting for their spring season to kick in so that we can use the 3 months of bank statements and then try and get them their refinance completed.
Oh, that's great. Okay. So that basically explains why those bank statements are important and why they're needed usually on a typical pre-approval when you request that information. So thank you for that.
Correct.
So with COVID, you've heard about forbearance and furlough, and the last time we spoke, we talked about that a little bit. Since then, have any COVID-related mortgages come out to the marketplace based around forbearance or being furloughed from your job?
Well, first let me say that clients should call around and check around because I'm not the end all be all. There might be another loan product out there that I'm not aware of, so we'll start with that.
Yep.
But as far as what I have, it's been just guidance from Fannie Mae, guidance from Freddie Mac to basically state, hey, listen, if they had a COVID-19 forbearance, let's get a copy of the forbearance paperwork. Let's prove that they are now out of the forbearance, either through a loan modification or just ending the forbearance and then making 3 months monthly payments.
Sure.
And as long as we can prove that they paid 3 payments on time, we can finance them. As far as being furloughed from their job, that one becomes a little bit more interesting. So if you had a COVID-19 forbearance, you're out of work for 6 months, 7 months, you could use your income immediately by going back to work if you are salary. If you are an hourly wage earner, what an underwriter is going to do is actually take your gross earnings from 2020, as little as they may be, and also average them in with the past 2 months now of payroll. And that's the only income that we can use to qualify you off of. So hourly is getting a little bit difficult as far as qualifying, whereas in times past, you were out of work a little bit, you got back to work, they could just use the most recent pay stub. Now it's more difficult if you're hourly. If you don't have a set salary, then you're going to have to average out those hourly earnings.
That's good to know, actually. I just had a client the other day ask me that exact question about being furloughed on a job, and they are a seasonal type of employee. So something I can pass on to them. So
Absolutely.
information. So I spoke about this on one of my videos maybe a couple of months ago, where I get all these calls all the time of people about they are just don't have the correct information of what they need to be pre-approved for a mortgage, or what they think they need as far as money down. So is it still out there that you still need 20% down to be able to buy a house or to put down on a house?
Well, 20% down is nice, right? So if you have that kind of money to put down, it's definitely something that I encourage most borrowers to do, because you can avoid PMI at some of the lowest rates out there. There are programs with as little as 5% down with no PMI, which is that extra insurance that you typically have to pay on a purchase. But those rates run a little higher. So if you have the 20%, great. But no, you do not have to put 20% down on a purchase. In fact, I'd say a good 90-95% of my clients are doing anywhere between 5 or 3% down. Okay. There are some income requirements. You can't make too much money if you're trying to put the least amount down. Those 3% down products do have some income limits depending on the geographical location that you're looking to buy. And there's even some no money down products, Brad. You know, USDA is still out there. You can buy in a rural area, like our areas here, Dartmouth, Westport, Cushnet. You can buy in those rural areas and put no money down. But again, there are income requirements for that based on your family size. And that's something that we do as part of the pre-approval. We try and exhaust all efforts, see what products the client qualifies for, and then give them the pros and cons of each of those products so that they can make an educated decision for themselves.
That's great. Yeah, I mean, a well-informed customer is much better to work with, and they know what to expect coming forward. So, do you have any other new products, just in general, in the marketplace that's coming from the mortgage side?
No, not necessarily any new products. It's just I'm happy, believe it or not, with COVID-19 and everything that's gone on, that all the products that we have stayed. A lot of talk about jumbo loans actually coming back as well. We're supposed to be getting an aggressively priced jumbo product in the near future. That will allow basically 10% down with no mortgage insurance, which is a huge product out there. Yeah. So we're excited about that, but it's not out yet. It should be out soon by month end. So I'll keep you informed.
Great. All right. So I know pre-COVID, and when COVID hit, there was a change drastically, I think especially on the FHA side, as far as a minimum credit score needed for a loan. Has that gone back down to the pre-COVID levels, or is that still maintained where we are today?
Yeah, so the initial reaction, a lot of lenders pulled back, even though FHA will go as low as a 580 score, let's say. Most of the lenders out there want you to be at 640 score. A handful of them are at 620 and above. But actually just this week, Brad, and you and I even had a chance to talk about this, but we actually have an investor that's willing to go down as low as 580 score, as long as the client does have stable income. So if they've been at their job for 2 years, no issues due to COVID-19, and they have the money to put down, 580 score. It's actually done as a manual underwrite. So those typically take a little longer, probably closer to 45 days in order to get that purchase transaction closed for that client. But now we're starting to see it creep back where those products are coming back on the market. So that's a good thing.
Yeah, that's great. From our point of view here in the real estate, and as far as transactions going forward, things that seem to be holding up a transaction at this point is the appraisals. Are you seeing that on your end as far as appraisals being backlogged and holding up closing your loans?
Yeah, so I have had a few, Brad, where that has been an issue, but typically that's been in the farther areas. I had a property in Carlisle, Massachusetts, which is not like your inner city areas.
Right.
I had one out in the Pittsfield area, which is far west in Massachusetts. Those took a long time, but in our area, anywhere between 10 to 20 days. My main investor, where I send 90% of my loans to, has what's called an appraisal promise. So basically, if the appraisal is not returned to us within 10 business days, they have to refund half the fee back to the client. So what we're seeing is, because our investor has put that type of pressure on the appraisal management companies to get the report turned in a timely manner, the appraisers are getting them in because they don't want to make half their money, because of course that's coming out of their pocket. So it just puts a little bit extra emphasis on the effort that needs to be given on the appraisal side in order to get the transaction completed. I've also been very fortunate enough to have a lot of my transactions go through with appraisal waivers, even on a purchase, Brad. If you're putting down 20, 25%, a hefty down payment, sometimes when you run that through Fannie Mae and Freddie Mac's automated system, you can get an appraisal waiver, which kind of makes people pause for a second, but it's a great way of saving money, and they agree with the value of the property that you're buying.
Yeah, no, that's great, and I think that works in our favor too. If an agent or a client is using someone like yourself that can, has a relationship with or an agreement with those appraisal companies, they have to get that done in a certain amount of time. It's reassuring to the seller or listing agent side that, hey, listen, this isn't going to hold up the deal as far as we can tell, because they are under a timeline to get this done. So once again, it's another great thing to put in there to add as far as your offer and the power it has behind it, knowing that with the appraisals.
Yeah.
So that's great. Does everything need, so I know in COVID they were doing appraisals and some were just doing drive-bys because they didn't want to go in because of COVID. Are you still seeing that too as well, or just?
I've had a couple of clients. It's funny. There's ebbs and flows. So some months I'm seeing a lot of the clients are saying, "Hey, we don't want anyone in our house." There's guidance for that. There is guidelines for that. So they can do drive-bys and whatnot.
Okay.
We have to order it as a COVID-19 appraisal. It is a little bit more costly because there's more work needs to be done on the appraisal side, I'm sure, in order to make sure that they're accurately determining the value. But other than that, most clients have just been letting it go through, letting people come in for the 10 or 15 minutes, snap the photos and leave. The appraisers have been very good, Brad, on making sure that they go in there, they're protected, they have their masks, they're disinfecting their hands before they go in for what little they have to touch, and then producing the report, 7 to 10 days later after going to the property.
Yeah, that's great. I'm glad I didn't even know that was an option that you could have a COVID-19 appraisal. So that's good information for people to know that, if they are concerned about having people through the house, stuff like that, still that is an option for them, out there.
Yeah, obviously safety is the most important, and you have people that, there's two sides of the aisle, and those that are really concerned, should obviously take advantage of using that COVID-19 appraisal.
Yeah. I know we talked about a little bit before about how fast you're closing loans, right? Which is great. Typically though, are we still looking at a 45-day closing for most transactions?
Brad, since I've been self-employed, since I've been doing it myself, I haven't had one go over 30 days. So I've been very lucky.
Right.
I will tell you that it takes a lot of give and take between the client and myself to achieve that goal. So I try and set the deal up for success by talking to the client from the beginning about providing all the documentation in a timely manner. If I ask for 4 or 5 things that an underwriter requested, let's get them in there right away so we can have it reviewed quickly for you. Typically, the conditions are reviewed within 24 to 48 hours of me sending them in. So as long as the client's diligent enough to work with me throughout the process, the deals are closing really quickly. In fact, even on tougher transactions, like you and I recently had a VA transaction, those historically run about 40, 45 days, and we got it done in 19 days, you and I, from start to finish. But that took a lot of hard work on your end, and a lot of hard work on the veteran's end, because he actually needed to do a little bit of work and work with the seller on that property for some chip and paint issues. And we had to send an appraiser back out there for a re-inspection. So all parties really needed to work as quickly as possible to get the job done. As long as people are doing that, it's going to close fast, Brett.
Yeah, that was a great team effort on all sides there to get that one closed.
Yeah.
So, that was a great transaction. As you know, being in this industry, the real estate market here is very competitive on the buying side. Any advice, suggestions to buyers out there from a lending point of view?
Yeah, I think the biggest thing, Brad, is to make sure you're getting a full pre-approval, right? So too many times people will just talk to a loan officer on the phone. They'll give us some preliminary information. Maybe they're giving them what they feel is their income. Maybe they're telling them, hey, I want to qualify for a $400,000 home. And they're not providing any documentation to that loan officer, which is fine. That's the way it can be done, right? But I noticed that when you send a client to me, you have encouraged your clients to give all income docs and asset information right up front. Hey, give Grant 2 years tax returns, give him 2 years W-2s, give him a month worth of recent pay stubs and all your bank account information. Because if he can review that, he's going to be able to more accurately depict what type of home you can buy, and you won't get yourself in a pickle, right? You won't be making an offer on a home and then 10 days later being told, no, you can no longer buy this house. We've now reviewed your income documentation. and you no longer qualify. So we like to avoid those pitfalls. So I love working with you because you always encourage the clients to get the documentation right up front.
Good. Yeah, I think it's beneficial to them, and really and like I said, it saves some time on the back end too, as long as everything's up front. And you got a strong pre-approval too. So when I have a listing agent that may need to call you to reaffirm the buyer's closing time, you already know you've got that information and that you can meet
Yeah, I
that.
love telling them that. I love saying, listen, I've actually reviewed all their income and assets, and this client's good to go. You want to be able to make an offer with confidence. You don't want any what ifs when you get to that point, because by that point you've fallen in love with the house, right?
Yeah.
And you want to get in there for your family. So let's make sure that we review everything and give you an accurate pre-approval.
Great. Well, a lot of great information. Obviously no one can predict the future and things are changing every day. But do you foresee any changes coming up here on the lending side, over the next year?
On the lending side, that's always a what if. They can always come out with a COVID-19 loan product, and if they do, I'll be the first to tell you. But what I'm seeing is that rates are still at 30-year historic lows. It's a great time to buy. There's very little inventory, so that does make it difficult, right? But some of that inventory is going to start to free up as people feel more comfortable with the vaccine getting a hold of everyone, and people get back to normal again. I think you're going to see rates stay relatively low for the next year, which is a great buying opportunity. So as more inventory opens up in the spring and summer, don't be hesitant. Get out there and buy.
Yeah. Well, wonderful. I really appreciate your time today. I appreciate all the great information. I'm sure it's going to be helpful to everyone that's watching this video. So anyone out there, if you guys have any questions about refinancing or a new loan for a purchase, please reach out to Grant Menard here at OnShore Mortgage. I'm going to post all his contact information below. And thank you, Grant, for your time, and enjoy the rest of your day.
You're welcome, Brad. Always a pleasure working with you, my friend.
Thank you.